What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. We had another interesting week of price action, specifically in the S&P on Monday, to be exact. So we'll talk about that in the video. I would highly recommend that you watch last week's analysis just so you have a foundational understanding of what the sort of premise is that I'm talking about there. I will link that down below in the description. Also linked down below is the free Swing Trade newsletter, Instagram, Discord, all that good stuff. And if you appreciate that, let me know by leaving the video a thumbs up. Let's see if we can get over 200 on this one. I think last week's video was up around 190 something. So if we can hit over 200, that would be awesome. But without further ado, let's hop into the analysis. Jumping right into our SPY weekly chart, there's really not much of an update to give here other than everything that we talked about in last week's video still remains true. I think the one thing we could speak to here, if you didn't watch last week's video, all we were sort of looking for was some sideways consolidation and price acceptance in that box, specifically above the $300 key support area. But what furthers the case and makes us more bullish, in my opinion, is that on Monday when we got the gap down below $300, it was immediately bought back up and price was pushed back up into our consolidation area above 300. So I do think that is a bullish thing, and I think the more sideways consolidation we can get happening, something like that, it would further the case that on any sort of breakout to the upside, we do want to see the move back up to our all-time high, simply because, again, if you didn't watch the video last week, we were looking at this weekly bull flag to play out, and that's sort of the picture-perfect way it would. So that's what we're looking for on the weekly. Again, not much in terms of structural updates or things to pay attention to, but on the daily time frame, there are two new key supports and resistances that I think will be very important going forward this week, those being the 308 mark and the 312 area on the chart. Let me actually break it down to the 30-minute just so I can sort of illustrate why these are, in my opinion, going to be so strong. Firstly, the 308, which is this level here, you can look at how many times price has been rejected, it then acted as support, and it is now starting to act as support at the end of the day there on Friday. So that is going to be a key one to the downside, and why I think that 312 is going to be a key area as well is specifically, sure, it acted as support and there are some wicks piercing it to the downside specifically in this area, but if we look at Thursday's price action, Thursday is this one here. Count the number of times that price tried to get above it and couldn't. So we have 1, 2, 3, 4, 5, 6, 7. 7-ish times price tried to get acceptance above that key resistance area and back into yesterday's, or the prior 2 days really, range. It couldn't do it. So 312 will be a key one going forward, and I hope this look into the 30-minute was helpful, but some targets, if either of those break, let's just cover that real quick. If 308 breaks to the downside, we're looking at the 200 SMA and the $300 whole psychological support to come into play. 200 SMA is currently sitting at 301.45, as you can see right there. Anything lower than that, and I just also want to point out how much support we have down here. Look at all the horizontal lines we have going there. So, I wouldn't say that this gap would necessarily provide support, but if the gap fills, then it should bounce off of the bottom end of the gap. There's also the 50 SMA in there. There's our previous double top resistance, which should act as support coming down from the top side. And there's even this area in here, which is the top of our final gap to the downside here between 291.92 and 286.32. But I would expect that if 300 breaks, all of this congestion and structure that we have in this general area would kick prices back up, at least to retest the 300, if not come back up into that consolidation range that, if you remember, looks something like this. So that sort of covers us to the downside. If the 308 breaks, again looking for 300, and then lots and lots of support in this general area of the chart. Anything to the upside, though, remembering our 312 resistance, if we can get above that, we're looking for the gap fill above. So that's between 315.55 and 318.22, remembering that we did have a larger gap, which has partially filled based on a gap up on Tuesday, so kind of a lot to digest, but the only gap above remaining there, and then anything further, our resistance from the top of the balance end, that's at 323.50 just about, and higher than that, remembering, again, a lot of things to remember in this video, but that this is indeed a fake wick up here, and there is a gap to be filled to the upside here between 325.16 and 332.12. After that, it's the all-time high. So do I think, again, that that's going to happen this week or the week after that? Not necessarily, but these are the things and targets that we have to the upside and downside to play off of. Again, based on the fact that we are sort of mid-range of our consolidation zone that we want to be in, we're going to sort of wait and let the market dictate to us early on in the week. Are we going to see a retest of the upside, or are we going to see a retest of the downside? And again, that's really going to be a factor on, is 307.90 or 308 going to hold, or is it going to break, or is 312 going to act as resistance, or is it going to break? That will sort of determine what we do early on in the week. So jumping over to the Qs, they look even more bullish than SPY to me, just simply because of the fact that we have a tight 3-day balance area, if you will, right? The bodies of these candles are all very similar in size and in position. And then on Friday, we have a huge gap up, and prices fall back, but they don't really violate the lows of that balance area. So key support now found in here right around 240, 250. If we break that in the week, which again, I do think this is more bullish than SPY, but if it does break, looking for support to come into play at the lower end of our channel. Also, our previous all-time high here at 237.50. Anything lower than that, and we have 231.90. So based on the bullishness of the structure that's happening here, I don't think that we necessarily want to break down out of our bullish channel, but I do want you to be prepared with those supports below. However, what I think the likely scenario is again, some sideways consolidation, digest, this, and, resolve this 240, 250 area. If we resolve to the upside, our target's just going to be a retest of the all-time high up here at 247.82. Anything higher than that, we have our upper resistance trend line from the bullish channel and blue sky territory levels, which are $1.5, as well as any intraday levels of that form. And lastly, checking in on the IWM, what we're looking at here is a double bottom that has formed actually right at sort of the bottom end of our support trend line from the bullish channel. So right around 139.75, just to round it off to a quarter there, is going to be our key support early into next week. If it breaks, again, looking for a next move to go down to our previous little area of support that we have. Let's actually adjust that. I like the fact that we have more of a triple bottom happening at that level there, so we're just going to get rid of that one. I like this better here at 134.50 than I did that line slightly cutting through above. So that should be key support and next target if our double bottom breaks. Here, anything lower, 50 SMA will start to catch us in between. Specifically what I like about that as support is as time goes on, that 50 SMA will start to do that, and if it does break, should act as a first touch super support bounce. Look for the move, something like that. But again, anything lower, we have a gap below here in the chart between 130 and 125.50. So keep that in mind should things get nasty to the downside. But based on where we're at, horizontal support as well as the channel support from our bullish channel, I do think that a potential retest, of course, wrong tool, a potential retest of our resistance up here at 145 could be in store. Anything higher than that, we have our 200 SMA, which has rejected us in the past here, to be paying attention to. That's at 147, almost the round number now. And then higher than that, we're looking at 152.38. So I think to get a huge bounce in IWM and start retesting levels like up here or even up here, it would require that the whole market be moving quite strongly. And by that, I just mean the Qs making new all-time highs and SPY driving up towards the upper resistance portion of the balance. So that would sort of be what needs to happen before IWM would be making up any sort of grounds up into these areas. But just do know that they are up there and where they are. If you've made it to this point in the video, I'm sure you're enjoying the analysis, so be sure to hit the thumbs up button and subscribe to the channel. That way you know every single time I drop a new video. So starting off on Apple, this one is looking extremely good for a breakout into blue sky territories, specifically because we have all of these touches to just about the same resistance area on the chart, and when you have all of this pressure building up below, it tends to lead to nice breakouts. And targets to the upside, so we're going to look at potentially doubling this range, the pullback range, if you will. So looking at like something like that, just about. So right around, if we draw in or just put the cursor there actually, let's see what that brings us to, right around 375, I would call it. So 375 potential upside target. Nice round number there to be aiming for, but of course on the way playing blue sky territory numbers, which are $1.5, as well as any intraday levels that form. What I like specifically about this setup is that we have a double bottom forming here, where we can limit our risk. So let's say we enter somewhere in here, we put our stop loss down here towards the bottom below our support portion, and of course we're playing to potentially make a move up to 375. So that is certainly better than a 3-to-1. That might even be a 4-to-1 risk-reward ratio right there, and you would be sitting pretty if the trade works out to the upside. And if it doesn't work and you get stopped out, it's just a very manageable small little loss there. So that would be how to play this one to the upside. To the downside, though, just to cover our supports, let's say 345.30 breaks. Our next ones below are at 335.50. Anything lower than that, and we'll just be retesting the previous all-time high, which is here at 327.85. So Netflix being a very strong name actually this week, considering that it had 3 up days on Wednesday, Thursday, Friday, whereas the market kind of dribbled lower, the Qs kind of went sideways. So holding up with some extreme relative strength here. We're currently sitting up around the all-time high just about. Of course, the all-time high technically is up here at 458.97, but currently right below it at our previous 455 stubborn area on the chart. If we can break out higher, great. We're looking at the all-time high to act as resistance, and then blue sky levels, so $1.5, as well as any intraday levels that do form. If we get rejected here and start to see some form of pullback, that would actually be a good thing in my opinion. I would be looking to be buying anything that pulled back into this area here around 439.25. Anything lower than that, and it might be a little bit too aggressive for me to start looking at as a pullback. And I would be targeting, maybe a breakdown further to the 50 SMA as well as our 427.67 support below. So that is down and upside here on Netflix. But again, surprising relative strength here. I would be looking for a move higher in this one. So Tesla getting a huge bounce off of that support trend line that we saw there on Monday, again coinciding with the whole markets moving up. It was sort of a picture-perfect scenario there. And then just balancing out the rest of the week. So a new resistance piece could be put in right around here, around 1015.25, just below the all-time high, of course, at 1027.50. If we can break out and clear, of course, we're in blue sky territories on Tesla, something over $1,000 now. We're looking at whole dollars, $5 marks, $10 marks to act as resistance. Not so much those 50-cent things or quarters per se, as well as any intraday levels that form, of course. To the downside, though, we are looking at the support trend line to continue to provide support just because of how strong it acted here. So probably a first touch buy on any sort of pullback into it and then bounce higher. But if it gives, we have 968.99. I think that was the previous all-time high. Yep. To retest that and potentially confirm that as support on the back test. But if we go lower, of course, our next one is much lower at 911.63 as support. So Alibaba didn't really give us much of a chance to take part in this breakout. Of course, on Monday, we had a nice green day off of our support portion here, but we didn't break out or have clear signs of retesting the highs, of course, gapping up there on Tuesday. And now, again, just doing what it does best, or what it seems to do best, is just forming another sideways consolidation zone in this area. So right now, we're currently at the support portion, retesting that at 220.31. If we break down lower, simple move back down to 213.70. Anything lower than that, and we have 210.30, and then our support trend line and 50 SMA. To the upside, though, if this new balance area, if you will, breaks out higher, of course, we will have to battle back up to our 225.30 and 226.75 areas, which come as resistance from back here, if you remember that. But if we can break out of that, we're looking at 231.05 as our next target. Facebook looks good as well, kind of just like Netflix. It had some relative strength there on Friday specifically, holding up well. We're right at the all-time high, so very similar to Apple, very similar to Netflix, more similar to Apple, but we have, touch 1, 2, 3, now 4, all at the all-time high. Wouldn't be surprised to see a breakout over that and potentially do something that would double this range. So let's just do some quick adjustment of the chart so we can look at that a little bit better. So a doubling of this kind of range to the upside would put prices somewhere up here. And if we look at the cursor, that's putting price right up around 260. So 260 upside targets if we can break out over the all-time highs and get continuation up that way. Of course, playing $1.5 as well as any intraday levels that form on the way there, just like we would on Apple. And on this one, again, you can do a very similar thing. You can put your stop loss, for example, below this little double bottom here at 232.22 and look for that move higher. The risk reward wouldn't be as good as it is on Apple, but that could be a potential way to play this one. To the downside, though, our key support is going to be the 230.22. If we break down lower than that, it's really up to this trend line to act. We haven't really interacted with it in quite some time. You can see our anchor point is here. 1 and then 2 touches. Whether or not it bounces on a third touch and people are still watching that, we'll sort of have to wait and engage, see if that happens. But anything lower, and we're coming back down to our next key support below at 222.57. So Nvidia stacking up all of these very similar sized bodied candles one after another, and then tightening up, and finally having a really lackluster break of all of these highs there on Friday. So huge inverted hammer. You could even call it a gravestone doji, if you will. So we'll have to wait and see how this one kind of plays out early on into the week. But of course, we have our all-time high resistance area. We'll just call it right there at 378.50, splitting the difference between the true all-time high at 380 and the high of this candle, which was at 377.80. So splitting the difference there, we'll again have to wait and see whether or not we confirm this area as support. It would be nice to see something where we go sideways, maybe just above our 367.50 support area, which was, previous resistance all these times in here. So if we can get acceptance above that level, then sure, maybe another swing to the upside here on Nvidia. But if we can't, and we break down through this sort of area of support that we have on the chart, looking for a move back down to very, very strong support in here at 347.41, and with all those touches, if we get a flush, that would be what we consider a flush point. I could easily see price coming back down to retest 326.78, specifically if our 50 SMA is starting to coincide with that area and do something like that. So a little bit extreme to the downside, but I do think with all of this pressure that's built up on this level at 347.41, a break of it could be quite nasty. So Microsoft didn't quite get up to the $200 round ultimate, sort of area on the chart there, but just shy by about 70 cents. So we'll see if it can go up and tag that 200. Sometimes when you get moves this close to a round target like that, that kind of is the move. The same thing happens with moving averages. Sometimes when you get close to it, but you don't quite touch it all the way, that could be potentially the move, if you will. So we'll see if it wants back up. What's looking promising about that potentially happening is that we do have higher lows forming on a daily on a daily time frame. So every single day we've had a higher low form. We've also had a higher high form every single day leading up into this. It's going to be dependent early next week whether or not that trend continues and we see a nice push up through our 198.52. If we can, again, looking for 200 and then blue sky territory numbers, whole and half dollars, as well as any intraday levels that do form. To the downside, though, let's say this all falls apart. Our trend line has acted quite sloppily. You can see price kind of goes to it and then just rides it up. It even dipped below here. So we'll see what happens as we get into the trend line, whether or not it provides clean support or not. But as a horizontal level to pay attention to, 190.70, and then anything lower than that, 187.25 would be the focus, just because of all the touches we had specifically in this area of the chart right there. So Amazon looking okay. It doesn't really look like it wants to continue much higher, specifically with this doji that has formed here on Friday on a very, very small bodies leading up to it as well. I don't think it has really it left in it to keep pushing into new all-time highs, of course. I wouldn't be surprised to see it sort of consolidate and just chop around in a zone that looks generally like that. So we'll map out some supports that we don't really have in there yet. Let me adjust this so we can see a little bit better. Doing something like this, sure, much better. Hopefully you can see that now. So as support, if we get our tool back there, I'm immediately drawn to this level there at 26.25. We can make that round on something like Amazon. And then this level as well looks interesting to me at 26.60 just about. And of course, this is going to act as resistance on the way back up if we were to retest the all-time high at 26.9840. So that's kind of where we're at there. Very little structure in here. You could call this an area at 25.7783, but lower than that, and we're retesting sort of where the breakout all began from here at 25.2550. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know down below in the comments section, or feel free to let me know by just leaving the video a simple thumbs up. That being said, subscribe to the channel so you're notified every single time I drop a new video, and with that, I wish you a green trading week.